This is episode 545 of your Daily Detroit for Thursday, July 9th, 2020. I'm Jer Stays. We've talked about auto insurance in Michigan a few times on this show. I can remember back to a beautiful day on the porch of the Grand Hotel on Mackinac Island a little over a year ago, when I was with Governor Gretchen Whitmer and our legislative leaders who were hailing a deal that was supposed to save Michiganders money, which is a top concern among residents as we in Detroit and statewide pay the most for vehicle insurance in the nation. At the time, there was a lot of excitement by media pundits, politicians, and others, mostly repeating talking points without really looking into the numbers. Lots of backpatting. But now this reform has taken effect, it's a confusing mess. So attorney Todd Berg of Michigan Auto Law joins me to unpack this. The firm has been ranked by U.S. News & World Report as among the best law firms in America in the practice area of personal injury litigation for plaintiffs, and it's quite the conversation. Let's get started. Welcome to Daily Detroit, sir.
Thank you very much, Jared. Appreciate it. Glad to be here.
I want to reach out to you to unpack what is going on with this auto insurance stuff. This is a story we have been following a lot on Daily Detroit. I personally have a lot of interest as a city resident with rather high insurance costs compared to a lot of my friends and neighbors in the suburbs and other parts of the state. First off, let's do a level set. What exactly is going on here? The magic of July 2, all of that stuff.
Well, July 2 is, as you say, the magical date because that's the day on which everything changes in terms of the coverage that Michigan drivers are required to have under Michigan's no-fault auto insurance law. Any policy that's issued or renewed after July 1st, 2020 has to provide several options for drivers to choose from in terms of what kind of coverage they want to have, what kind of medical coverage they want to have available to them if they're injured in a car accident. For the last 40 years or so, all drivers in Michigan have been required to purchase unlimited no-fault medical coverage, which means that if they're injured in a car accident, they have unlimited medical benefits to help them recover and rebuild their lives. It's subject to certain conditions, like whether it's reasonably necessary and related to rehab care and recovery. For the most part, it's unlimited. It could be $100,000, it could be millions of dollars for people that are injured and their injuries sideline them from their lives for the rest of their lifetime. In the name of trying to find a way to modify our insurance law so that people could save money on their premiums. This was the intent. I'm not necessarily saying this is going to be the effect, but the intent was that they would change the law so that starting on July 1st, people could choose to get less coverage. The reasoning being that if you opt for a lower coverage level, you'll pay less because you're getting less, therefore you'll save. So in policies that were issued starting on the 1st, people could choose from several options. They could choose from unlimited, they can continue with what they've always had. They could choose a coverage level of $500,000 for medical coverage, $250,000 for medical coverage. If the driver or the named insured on the policy is enrolled in Medicaid, they could opt for $50,000 in medical coverage. And if the driver or the named insured on the policy is in Medicare, they could opt out of no-fault medical coverage altogether. If they were involved in an accident, there would be no medical coverage coming through their no-fault policy. It would have to be through Medicare or some other resource.
So the idea basically being is to offer a trade-off to people if they want to, have less through their healthcare coverage. And the idea being is that they could then lower their premium, because one of the things, having covered this story, is that a good amount of what you're paying in auto insurance in Michigan is tied to your healthcare.
Yes, it's two things. I believe the intent was we're going to generate savings for people because we're going to allow them to get less no-fault medical coverage, which will lower their premiums. But implicit in that is if you're injured and you no longer have all this unlimited through no-fault, you're going to have to go somewhere else. You're going to have to go off onto private health insurance. You're going to have to go over to Medicaid, or you're going to have to go to Medicare. So that's part of it. The other part of it, which is not talked about as much, is in terms of the savings. You've no doubt seen that the new law mandates certain percentage reductions in the average no-fault medical premium for people. The percentages that are bandied about, that doesn't mean that you're going to get 45% off of your total bill. So if you're driving in Detroit, where by some accounts people are paying as much as $6,000 or more a year in auto insurance, you're not going to necessarily get 45% off that full $6,000. You're going to get 45% off the no-fault personal injury portion of your bill, which is only about 35%. So you got a $6,000 bill, 35% of that approximately is devoted to no-fault coverage, which covers your medical, your wage loss, replacement services, those kinds of things. But you would get 45% out of that 35%.
So I was up on Mackinac Island when they signed this legislation, and I was a little skeptical at the time because, at the time, the politicians were saying, oh, you're going to see a $500 drop in auto insurance premiums on an annual basis. And then I sat there and did the math as somebody who lives in the city and realized, oh, that means we're still going to have the highest car insurance here in the city of Detroit and statewide in the nation. And I was kind of like, okay, I guess that's nice on the edges, but it didn't feel like a full reform, and it feels like this is really complicated for folks to even get a hold of the savings.
It is really complicated. It is extremely complicated, and it's confusing. No doubt the effort to bring about this historic, unprecedented overhaul in no fault was a big deal. But in terms of what people are going to see in their auto insurance bill when it comes through, I think it's debatable, and I think your skepticism is well-founded. Not to say that $500 savings is anything to cough at. I mean, everybody needs $500, but if you're already paying $6,000 for car insurance and now you're only paying $5,500, you're still getting socked in the gut. And as you said, you're not only are you still paying the highest rate in the state, you're still by far going to be paying the highest rate in the country.
Yeah, and you're also then getting less coverage around that and less security when it comes to insurance. So what do people need to do to make sure that they're getting whatever savings that they can if they're interested in that? And then what should they be doing? And I guess maybe even like a third thing, like, is this it? I feel like it's kind of like the fizzling of the firework versus, say, having a rate that is more competitive with the rest of the country. Because one of the things that strikes me about this is that we're giving up a lot of benefits, but we're not actually getting that much savings. And that's why I'm kind of confused. And I apologize because I'm not a lawyer, but I have friends in other states who literally aren't moving to Michigan because their car insurance would be an extra literal $2,000 or $3,000 a month compared to wherever they are in the country. And we're just not competitive, yet they seem to be functioning fine. I guess I'm completely confused by how we can be so different than everywhere else.
Well, the reason we're so different than everywhere else, I mean, just at its most fundamental level, is that Michigan, like maybe only 10 or 11 other states, is a no-fault state. So we have an entirely different system, and the requirements and the costs associated with that system make us completely different. So it's very difficult to compare what we are paying in car insurance to what people are paying in Indiana or Ohio. It's frequently done, but at the same time, we're not exactly comparing the same type of product.
Okay.
I say that because I don't want people to think that there is a fundamental malfunction in what's going on in Michigan, that there's something wrong with the state. And there's not. It's just that we have a different system. It's a very good system. And if you're seriously injured in a car accident in Michigan, you're going to be taken care of in ways that you would never be taken care of in other states. Sadly, I think some of those protections may be eroded under this new law, and the choices that people will make to take less medical coverage in the event that they're injured in a car accident. The big selling point for this is, are people going to save money? And we want people to save money. And that's what the lawmakers have told us. And they've promised in the bill certain percentages in terms of reductions. There are things that are not discussed as much as they should be that put those promises of savings into context. For instance, the promise of a percentage reduction in savings on no-fault medical premiums. Those are only average reductions. Those are kind of theoretical at the insurance company level. They look at all the policies they write for a particular line of coverage. And when they add it all up and they come up with the average, that average premium has got to be less than what it would have been in May of 2019. There is no guarantee under the law that the individual driver, when they walk into their insurance agency, that they are going to get a discount of some kind. Now, if they opt out completely, like through Medicare, Well, in that respect, you're going to get a discount because your premium's going to disappear. But there's a lot of other things to consider as well. But getting back to the individual, the law does specify on the flip side of that, there's no guarantee that the individual is going to see savings. The law does also say that an individual could see an increase in what they're paying based on the ratings factors that the insurance companies have to abide by when they're setting auto insurance premiums. That was another issue that was addressed in the new law, and there were certain factors that were ruled out as being prohibitive and unrelated and arguably arbitrary to the premiums, like what's a person's gender, whether they're married, where they own their home, how far they went in school. A lot of those things are no longer on the books. And the two that were probably the most controversial before the new law, and probably will continue to be controversial, and are particularly of interest to people that are driving and living in Detroit, were the zip codes and the credit scores. For as far back as you can think, auto insurance companies have used drivers' credit scores as a factor in deciding how much they're going to charge them for their auto insurance. And they've also used zip codes to create territories. And based on where a person lives in their zip code, that has also influenced how much they're going to pay in auto insurance. Now, when the new law was passed, much was made of the fact that no longer will there be credit scores or zip codes in the rate setting process. But the problem with that is there are basically workarounds for it. Some of the work that Douglas Heller has done for the Coalition Protecting Auto No Fault, he came out with a report in April, basically corroborates that. And that is, even though the new law says that the auto insurance company cannot consider your zip code, the auto insurance companies can still consider territories. So they might not necessarily be able to look at your zip code, and they might not be able to necessarily create a territory where they've made the argument that there's a higher risk in that territory. They might not be able to create those territories based on zip codes, but they can create them on just about anything else. The new law hasn't ruled out anything necessarily other than zip codes. So insurance companies are still free to look at geographical areas, which they will call territories, to set rates. And even though the auto insurance companies can no longer look at your credit score, they still can look at credit information. The law said no credit scores, but the law did not specifically prohibit insurance companies from looking at your credit history, your credit information, your credit report, or from compiling an insurance score that's based on that same credit information.
Well, that seems kind of more insidious then, right? Because at that point, instead of having a credit score that we all can understand and agree upon, now we've got this magical number that they've got, or whatever score or however they're doing this. It's kind of a black box, and we don't know what they're actually doing now.
Right. For the longest of time, insurance companies have used credit, or what are called insurance scores. And my understanding is that each insurance company has their own formula for coming up with an insurance score. Usually, a person's credit score is a factor in there. But it's important to keep in mind that a credit score, air quotes around that, is a very specific thing. It is the score that is assigned to a person by a consumer reporting agency. That's all it is. It's not your credit report. It's not your credit history. And it's certainly not this insurance score. So the new law has just carved out that one small factor out of the process. And to your point, yes, there still is credit-related information that is finding its way into the rate setting process that we know little or nothing about and have little or no control over.
Did the insurance companies win over the legislators on this one?
Yes, I think this will prove to be more beneficial to the insurance companies than it will be to the drivers. As for the lawmakers, I don't know.
Well, and the reason I asked that very direct question and being blunt about it is because the feedback that I get from listeners is that you've got a lot of people who this means a lot to them. You got a lot of folks in the state who are living paycheck to paycheck. Every bill counts, especially when you've got kids. Things like $100 here, $200 there, that really matters. And what I hear, it gets frustrating with all the talk of this stuff, and then nothing really happens, and people get tired and they get angry. And I mean, that's kind of why I'm conveying it, if you will, what I've been told from people who listen to us. They just want some answers, some ability to save money or find out what's the best thing to do for their family. I just think there's a lot of pent up frustration around this stuff.
There should be. And When we first started talking, I talked a lot about what the intent was and what lawmakers and people sought to accomplish with this. I mean, those are laudable goals, trying to save money for people. Obviously, I mean, who doesn't want to save money for people? And people pay a lot of money for auto insurance. So it's a laudable goal to want to try to go out and put some money back in people's pockets so they can pay the bills and keep paying for insurance and do all those things. The unfortunate thing is that there are a lot of elements to this new law that undercut the law's ability to generate those savings for people. We've already talked about a couple of things. We talked about the factors that credit-related information and where you live may still be a factor in terms of how much you're going to pay for insurance. So even if hypothetically you can somehow guarantee that you're going to save, 35% on your no-fault medical premium, that may be completely offset by the fact that you live in a particular place where there's somebody has determined it to be a high risk, or you have bad credit. Those savings may be totally wiped out. The savings may be completely wiped out by the fact that you now have to pay for more liability insurance, which having more liability insurance under this new law with the new lower medical coverage is a great idea, because we're at a much greater risk if we cause an accident and somebody sues us for causing that accident and they're seeking damages that exceed our policy. Because not only could we be liable for pain and suffering, now if somebody has opted for a lower medical coverage level, we have to pay for that as well. And so the reason I bring that up is the law has required us to carry more liability coverage to protect us in those situations. So that's going to also result in an increase in our premium. So even if your no-fault medical premium goes down, you're going to probably end up paying more for bodily injury coverage. There are also other incidentals that don't get talked about much. Are we going to be, say you put more money in your pocket as a result of paying less for car insurance, are your healthcare costs going to go up? Because for all the people that are injured in car accidents that don't have unlimited, if they're seriously injured, there's a good chance they're going to run out of coverage. And where are they going to go? Many of them, and I think this was the intent, many of them are going to get shifted over onto their health insurance. Health insurance companies know that, and they're bracing for it already. A lot of them up to this point didn't cover medical care for auto cases. That's being changed. They're going to have to increase their premiums to adjust for that new influx of costs. Health insurance companies are now going to be faced with paying for catastrophic injury claims arising out of car accidents, which they've never done before. And many health plans are going to try to beef up their plans so that they qualify as qualified health insurance coverage under the new no-fault law. And that also is going to require a revamping. It's going to increase their costs. Those things are all going to flow back to individuals in the form of higher health insurance premiums.
So what's somebody to do? Because that at the end of the day, there's a lot of frustrated people. I think about, I'm going to be hypothetical. In my mind's eye, I can think of folks, they got a couple of kids, they're working a couple of jobs, trying to make things go. And car insurance is something they need. Like, this is a state where mass transit isn't a real option, right? It's not like
I know it's not.
And so this is a tax. I mean, to me, I know it's not officially a tax, but in my mind, car insurance in Michigan is a tax and a requirement that everyone has to pay. And so therefore, we should be much more vigilant about what we have to do, because you can't functionally opt out. We're all forced to do this.
No, and you can't functionally opt out. And you asked, what is a person to do? I don't have a foolproof recommendation for what people should do, because this law is so complicated and the consequences of every decision that a person makes are so long-ranging and so impactful on every aspect of the person's life. It is near impossible to tease out what the right thing is to do for each person. Because some people will say, well, you want savings? You're on Medicaid? You go ahead and you opt for the $50,000 coverage level, and you're off to the races. Well, if that's all it was, then that would be fine. And people would probably be able to save money that way. But it's not that simple. There is a very big elephant in the room, which it has been addressed by the insurance commissioner, but it may not be the most definitive statement in the world. And that is that if you opt for $50,000 of coverage because you're on Medicaid, which you're allowed to do if you're enrolled in Medicaid, and you're injured in a car accident, your medical bills blow past the $50,000 limit, which could happen in one emergency room visit, and then you go on to Medicaid, the new law gives one the impression that Medicaid is going to cover you, without fail going forward. And the insurance commissioner has assured people that Medicare and Medicaid will cover these car accidents. However, there is a federal law that's been in place for ages. It's called the secondary payer rule. And the secondary payer rule, what that says is both Medicaid and Medicare are secondary payers. So if you're in a car accident and there is auto insurance available to cover you, neither Medicare nor Medicaid is going to step up and be the primary payer. They are only going to come in and save the day if they have to, only after the auto insurance stuff has dried up and is no longer available. So we don't know definitively from Medicaid or Medicare what they're going to do with their secondary payer rule. Some might say it seems unlikely that the federal Medicaid and Medicare services are going to allow a state to essentially nullify its secondary payer rule. If they decide to try to enforce their secondary payer rule, what's going to happen? Are they going to come in and say, okay, we're going to cover, but these are all going to be conditional payments, and then we're going to require reimbursement for whatever we pay? We're going to either require it from the individual, or if the individual sues for pain and suffering and excess medical loss, we're going to take it from there. I point this out because there are issues that are seemingly open and that are seemingly extremely high risk for all drivers. I know that it's very difficult to figure out how one is going to continue to pay for car insurance. But the flip side of that is, how are people going to pay for medical care if they're injured in a serious car accident and they don't have the coverage available to them? Those costs are off the charts. And that's why we've had unlimited coverage for as long as we have.
So it's really a dice roll.
Yeah, unfortunately it is.
So considering the situation, I guess I'll close here. What is it that people should do now, whether it's with their insurance policies, whatever, to make the best of this situation?
In a perfect world, what we are recommending to everybody in a perfect world under these new changes, because there's so many uncertainties and so many unknowns still, we are recommending that people maintain their unlimited medical coverage, because the fear of unknowing whether your health insurance is going to cover you, or if you're seriously injured in a car accident and you can no longer work, your employer provided health insurance is going to disappear. And whether you're going to be able to sue somebody else for those excess damages, who knows? If you're seriously injured in a car accident, trying to figure out where the money's going to come from to pay for those bills only makes a bad situation infinitely worse. So that's what we recommend, is the unlimited no-fault medical. I know it's extremely costly, as I've seen, at least anecdotally, from people we've talked to and in the media and news reports and the Detroit Free Press. I'm seeing that people who are opting for less coverage are still end up paying extremely high premiums compared to what they were paying for unlimited. People need to be able to afford to live. I understand that. But they also are extremely driven to protect themselves and their families in case tragedy strikes. And the best way to do that is with unlimited. The other thing that we recommend, and I know it's a lot to think about, but it's the liability coverage. We recommend that people carry coverage with a minimum limit of $500,000. It's more than what's required under the new law. But the reason we recommend that is because the risk that we are all facing, every one of us is facing when we drive on the roads under these new laws, is that we could be held liable for an incredible amount more than we ever would have imagined before. If we're in a car accident, if we cause it, and we cause somebody to suffer serious injury, catastrophic injury, and if they don't have enough coverage, they may be looking to us to pay the hundreds of thousands or millions of dollars that they're going to need for their lifetime's worth of medical care. I know it seems like a lot to ask, but at the same time, we're trying to protect ourselves and protect our families. Those are the recommended coverages. Talk to your insurance agent, find out what the quotes are for these various levels of coverage that you have available to you, and talk to more than one agent. Don't just talk to, maybe State Farm or Allstate or Pioneer. Maybe that's your go-to insurance agency, and it has been forever. Get a quote from them for everything, but go talk to others and go talk to independent insurance agents for sure to get the best quotes. And check price shop every year.
So every year do that. That's part of the annual ritual.
Every year. Otherwise, there's a thing called price optimization. It's this horrible euphemism because it's not that at all. Price optimization is where insurance companies, they make a calculation of how high they can keep increasing a particular customer's rates before that customer is going to go shop somewhere else. So they'll keep jacking you up until they get to the point where they're like, well, this is going to be too much. I think they're going to go somewhere else at this point. So that's why you go back and you look every year and try to get new quotes and consider jumping to a different insurance company if your rates are getting too high.
Todd Berg, Michigan Auto Law. I really appreciate all your time today. I know maybe this wasn't the most uplifting conversation for listeners, but it was chock full of information and real talk. And, I think it's a real help to folks. So I do appreciate your time.
Thanks, Jared. It was a pleasure being on today. I really appreciate it. And it's a very important topic. Always welcome the opportunity to discuss it.
And that is all for today's Daily Detroit. A reminder that we are wherever fine podcasts are found. And if you have feedback about the episode, you can hit us up at dailydetroit@gmail.com. We're glad that you're listening and hope this got you some value. All right, I'm Jer Stays. Talk with you tomorrow.